So did we get that weekly reversal candle we were all hoping for to signal a quick turnaround? The answer is partially. The Nasdaq made it closing at fresh daily and weekly all-time highs today, but the S&P 500 still has a bit of work to do. Still, things are generally looking strong on the back of the largest month of corporate buybacks ever, sitting at $166 billion for July alone. That smashes the previous $88 billion record, which was set all the way back in 2006. And just a few months ago, we were projected to have sharply reduced buybacks. What gives? Anyway, on top of these buybacks, we have a stellar earnings season with 83% of the S&P 500 beating earnings expectations, and over 94% of tech stocks are outperforming, which is massive. We also have positive structure shaping up on Bitcoin, which is now arguably a bellwether for markets, and Ethereum is knocking on the door of a breakout of that key $4,100 resistance. So whoever was hoping to check out during a quiet August might be glued to their screen just a bit more than they would like while they're on vacation. Let's get into the key charts for stocks, commodities, and crypto to see how this bullish week is going to impact the remainder of August. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a good week. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does help the content get out there to more people, and it means a lot to me personally. Now, first, I want to touch on a couple key events we need to look out for next week, because I am unfortunately going to be traveling for a job with AWS at the start of the week, and then my wife and I move back to our place in BC towards the end of the week, and I won't be able to record with all that travel and with my computer setup packed away. I'm really sorry. I know this is going to be the first set of uploads I have missed since starting this way back in April, but I'm still going to be posting on X, and I'm going to fit in some quick iPhone uploads to YouTube if anything crazy happens in markets. That said, for the next week's events that could move the market, look out for CPI on Tuesday, PPI on Thursday, and core retail sales coming in on Friday. Out of all of those, I think CPI on Tuesday is really the one that could shake up markets. The other thing I want to highlight, and you guys know that I am mostly skewed to the bullish side, and I think it pays to be bullish in markets. Actually, we know it pays to be bullish because markets move up 80% of the time. But we're starting to see some cracks form in the housing market. Now, interest rates are dropping in anticipation of rate cuts, which should be good. But we're also seeing the largest disparity in sellers versus buyers since the GFC. No one is buying right now, and real estate prices have been on a decline as a result. Now, this coupled with what we talked about just a few weeks ago about a record number of white-collar workers leveraging up debt on their houses to cover other debt, such as credit cards, auto loans, etc., is starting to become a bit concerning when we marry all that with AI job displacement. Now, we all know AI is amazing, but is shaking up a lot of industries, tech in particular, and folks are unfortunately losing their jobs. It's having an impact on the global workforce. I mean, I even read an example this week of how McDonald's are scaling down from 55 employees to a location to 5 employees per location because of AI and automation. Now, I'm sure we as humans are going to adapt over time, new careers will emerge, but my personal base case is that during this adjustment period, there is going to be a bit of pain that we need to go through until we come out on the other end. So with that, I'm just staying alert and looking for early signs of cracks to appear in the housing market as a result that could lead to a larger correction. Now, I'm saying all this because most major market corrections over the last 150 years have been land-led. Real estate globally is the largest asset, and it's where most people have the majority of their net worth. And I'm not saying that this exact confluence of factors that I outlined is going to be the cause of another correction in the near future, but we need to keep our head out the window just to be aware of shifts and cracks that could be forming because the housing sector moves quite slowly, and issues we notice now might take 12 to 24 months to really carry through in some kind of meaningful way that is going to have an impact on markets. But that's enough of the doom and gloom. Let's get into the charts instead, which for now are looking much more positive. Okay, switching it up a little bit today and starting on the Nasdaq, and also switching up that I'm turning off my video for the chart section. I uploaded a technical analysis 101 video. You can find that in the trading education playlist earlier this week. And I didn't keep my video on for that, and a couple folks commented that they really liked not looking at my ugly mug while we were talking about the charts. So let me know in the comments if you prefer this as opposed to my picture in the lower right-hand corner. But we can see here on the Nasdaq that we just barely closed in new daily and weekly all-time highs, and we had a great recovery from that drop last Thursday and Friday, and generally the structure here is looking really strong. We never broke these previous lows on our correction last week, and we've now set a higher high. And if we're just zooming way out to look at the confluence model clouds, this really looks like we are set up to continue in an uptrend for the foreseeable future. Switching over to the S&P 500, you can see that this just underperformed a little bit. Tech was definitely leading, and our weekly candle here, this is on the weekly, the last chart was on the daily, couldn't quite engulf all that price action like we were able to do on the Nasdaq. But I just want to revisit, since the bear market of 2022, the last 8 times that we saw a bearish engulfing candle like we had last week, just so we can map those possible outcomes. And I shared one chart on this, but I thought it would be worthwhile just to take a bit more in-depth look. And if we look at the last 8 instances, you can see we had one here with that engulfing candle where we had 2 weeks of correction and then a recovery. We had another one here, which looks similar to this week, where we had an immediate recovery the next week and then moved to higher prices. Another engulfing candle. This one led to 3 more down weeks and then a recovery week. And then this one, same structure here with 3 red weeks before we started recovering. Another immediate recovery here. So we have 2 that recovered immediately the next week. And then this one was a much longer recovery here. And this one, again, we had 4 red weeks. So 2 of the last 8 were positive in terms of a quick turnaround the following week. And it looks like that might now be 3 of the last 9. But we have to see how this is going to play out next week to be sure. If we go to the daily, I've heard some folks talk about this being a bear flag in terms of just the angle. When you drop down a bear flag, just give me a second to switch brushes. A bear flag can be horizontal price action like this before another move down, or it can be this 45-degree move back up. But given what we've seen in the Nasdaq, I would not put too much weight in this being a bear flag, particularly if we can break these previous highs next week. That would give us a new swing high and would change the structure of the charts. The one thing to look out for, if we can't make that new high next week, look for a tightening range that could play out for a week or two, where we just tighten up the price action before we figure out which way that wants to break. And that's certainly a possibility, especially with how things are slow this time of year and can pick up again in the fall. So look out for that. And the line in the sand for us is this low of last Friday, which is sitting at just over 6,200. If that breaks, then anticipate a bit more downward price action. And like we talked about on Monday, maybe it was last Friday, that the average correction for bigger corrections within a year, it's 5 to 8%. So that isn't too far to the downside. If we measure that out again, we already corrected 3.3%. If we correct that 5%, where is that? That would put us at 6,100. We also have this gap fill at around 6,000 right here. And then 8% would take us actually right down to the 200-day moving average. So that's a very logical target. And we have all this support from these moving averages down here. Now, the last thing I want to say, this pink line here is the 20-week moving average. And I'm just going to zoom out to the weekly so you can see those trend lines with a bit more price history. And the 20-week really provides strong support to the downside on a lot of pullbacks. If we ever get a pullback into that in the future, and it doesn't have to be this correction, this could be months or years into the future, the 20-weekly in an uptrend is generally a good rough buy the dip zone. And the other thing we're seeing right now that is pointing to more bullishness is that the 200-day moving average here is about to get crossed by the 20-weekly. And we inverted, which was a bit scary on this tariff pullback. Generally, when we're in a strong uptrend, the 20-week is obviously above the 200-day moving average the entire time. The only time it's below is when we are in a bear market. You can see here at the bottom of 22, and then we cross back above. So in terms of the current trajectory, it looks like in the next 2 weeks, if things continue on this current path, that we might have that cross between the 200-day and the 20-week, which would be a very positive sign of things to come this fall. Now, semiconductors broadly had a strong week, but I just want to look at MU because we still haven't gotten a good buy on TSM. That's the other one I'm looking at. And on MU, I started building a little bit of a position as we were bouncing here off the 618. And then I was looking for another pullback. I was hoping to get an entry at this trend line or at the gap fill closer to $100. I got in at like 104. And I did not get that. MU just ran away this week and had a pretty strong breakout from these previous highs and this little mini downtrend that we have been in. We broke that overhead resistance line as well. So I am not positioned as large as I would like in MU. If there is any other dip and we next week set a higher low, if we come back down and do something like that, I would definitely be adding to my position because generally this structure looks pretty strong to me right now. And on the daily, we are bouncing away. We didn't get all the way back to the bottom of the range, but when an asset is in a strong uptrend, and we've done this on Bitcoin in the past, you can start to project out an underside support trend line for RSI. So if the daily RSI dips back down, say in September or October sometime, we can look to this line for support. And if we look to the 4-hour chart, just in comparison, we had that bottom on the RSI, we moved to the top, then we found our eventual bottom. Now we have topped out and we started printing one mean reversion dot. There is a world in which this could cool off for a couple days next week, but on this asset, you can see that mean reversion can run for quite some time, and the 4-hour RSI can just have small dips back down without going back to the bottom of the range when it is in a strong uptrend. So that's something you have to be aware of. You can't, in an uptrend, expect that the 4-hour RSI is going to reset all the way back down for you. All right, just looking at gold briefly, I am glad gold didn't break out. Yesterday evening between Thursday and Friday, gold futures were at 3,500, which is up here above these previous highs. Then our next target beyond that would be 36, and if we break that, we would just be probably cruising up to 4,000. Gold futures spiked because of tariffs on gold bars coming in from Switzerland. Luckily, that didn't impact markets today. Maybe someone was playing the ARB play to even things out, but I'm glad this didn't run because when there's a flight to gold, granted this was caused by a different reason than we normally get flights to gold, it usually signals more of a risk off environment. And ideally, I would love to see gold continue to consolidate or cool off to give our risk assets more room to run. And then gold can have its moment in the sun if we do have a pullback sometime in 2026. All right, one other one that I didn't get my entry on this week, which is REMX, the VanEck Rare Earth Minerals Strategic ETF. That is a mouthful. And we were watching this last week. I was looking for a bit more of a pullback. My first entry would have been around 47 here at this dotted line, just above these previous swing tops. We didn't get there. I was waiting for it because the daily RSI broke this uptrend slightly and then faked out and reversed in the other direction. So I thought when we had this daily close, I'm going to get that shot at lower prices, maybe even all the way down to 43. Unfortunately, that never happened. This sector is really strong right now. I don't necessarily want to chase it, even though I think it does have room to run, but mean reversion is extended beyond what we normally get for this sector. So I'm just being a bit patient and seeing if I get another entry. I'm not going to bring this up in future videos every time unless something big happens and there's a good spot to get in. But if this is something you're interested in, keep it on your charts. Check it from time to time, see what's going on, set your alerts. All right, looking to Bitcoin, and I'm going to make this full screen, and I'll turn off the Confluence Model 2 just so we can really focus on the price action. And there are just two key zones that I'm watching right now. And let's clean up the charts just a little bit with lines that don't matter anymore. Yesterday on Bitcoin, we had a fourth time breakout. I posted this on X, and you know how I love my fourth time breakouts. Just of a little zone here with these three tops. And remember, they don't have to line up perfectly. You can give it about a 0.5% tolerance. And then we had that fourth time breakout and a perfect retest of this level. And now we are moving our way up. And next we're looking to this trend line overhead, where again, we have our 1, 2, 3 points. And then we would be looking for a fourth time retest. Maybe that will coincide with this point of control right here at 118,000. So that is going to be our big next test. And I imagine there will be a fair bit of resistance there. But in terms of our recovery structure, this is looking pretty good so far. The other thing that I like is that on the daily, we just had yesterday a close back above, I'm sorry, 2 days ago, close back above 117,000. Then we closed back below that on Friday. And now here is today's candle. So for Saturday, we'll have to see where that shapes up. But really holding above this breakout zone is good for the time being. And the other thing I really like, if we zoom out on the daily, is that we are finding support. Really have to zoom out. That we are finding support at this diagonal trend line right here. I'll just make it a little thicker so we can really see that. And this has been supporting us since the bottom of the correction on April 7th. We did break down from this trend line right here from the bottom on the 22nd of June, and then we back tested that for resistance. So we've had the last few weeks some mixed signals in terms of weakness here, but now strength here, this little fourth time breakout, and a breakout from this next trend line at 118,000 would be a very good sign of strength. Then breaking these previous swing tops here at 119,000 would really put us in a structure to test that mid $120,000 to mid $130,000 range. So we'll just have to see what this can do. And for Bitcoin, really watch the weekly close. That's an important one as well. I will post some updates on X. Maybe I'll record a little screen cap to post there just to give a weekly candle close update for both Bitcoin and Solana. Moving on to Solana, which has been correcting nicely, but we are now into our biggest point of resistance right here. This is our point of control at 177, and you can see how we had all this consolidation, found support, broke down from that, and now we are testing that as resistance from the underside. If we just go back on this line, you can see it also marked our previous tops back here in May. So this is a very important level for us to get above. In terms of just assessing the near-term rebound, I like to look at these drops in terms of all the different points we break out from them. And obviously we broke out from that steeper portion of the downtrend already. We then broke out from this smaller downtrend, back tested it for support and moved away. And now we also broke out from this major line in the downtrend. So we have broken all of these. We have gotten on top of them. Now, if we reject from this zone right here and correct, I would love to see us find support at this breakout zone before attempting that line again. That would be a sign of strength. And if we go out to the daily for Solana, on the daily, we are also right into confluence cloud resistance, which I have to turn on, getting into the upper band right here. So getting back into the upper band would really set us up for some stronger moves to the north side. So you can see we have all that horizontal resistance. We have this dynamic moving average resistance that we're on right now. And getting above that zone would be a good sign of strength for Solana. If we're looking to the daily RSI, that still has plenty of room to run to the upside. And if we look to the 4-hour RSI, if my charts will ever load, that also has room to run to the upside, even though mean reversion is starting to get a bit extended. So let's see what we can do this weekend. I anticipate we might see some chop tomorrow on Saturday just because volumes have been really low, both in the broader markets and in the crypto space, especially on weekends. But keep your eyes on this, and maybe we will see some more meaningful action on Sunday afternoon. Okay, we haven't been covering Ethereum much lately because it has just been hovering here the last couple of weeks, but now we are starting to see an attempt of a breakout of this zone. I would put the key level at 4,100 overhead. We did break out of this Fibonacci level right here, right at 4,000. And again, if we're just compressing our price action, these fib levels, the 786, this is coming from our all-time high to our bear market bottom. We have that 50% that gave us a lot of grief at 2,800. And now we are into this zone right here at 4,000 and 4,100. I'm just putting that in because of all these previous peaks right here. If we break through this zone, I would anticipate our next resistance would come in right here at about 4,400, let's say for round numbers, and then we have our all-time high after that. So let's see what Ethereum can do. We have getting fairly hot here on the daily, but if we look at things on the weekly compared to our last bull market here in 2021, we have still got a fair amount of room that we can run there. Our weekly RSI really hasn't gotten that elevated at all this cycle. All right, pulling up SUI, which someone requested that I cover today. And if I'm just looking at our local price action from April, we've generally been building the structure of a recovery with higher highs, higher lows, higher highs, presumably higher low. Perhaps we're bouncing away right here. But I think it's valuable to just bring in a bit more history on a chart like this. And if we do that, we can see that we appear to be in a bit of a consolidation range. And this often happens after big moves like we had in January. And it doesn't have to play out over months like this, but often you'll see a big move up and then this kind of tightening consolidation range before the market figures out which way we want to go with the price action. If we were to be putting a pattern with this, I've honestly never really charted SUI before, so let's see how this plays out. It doesn't give us the cleanest in terms of the touch points there, but we'll just go with it. And if we are going over the top and we were mapping to that right there, you could argue that we kind of had a breakout and a lot of back tests and are maybe trying to break out from that again. So not totally the cleanest pattern in terms of everything lining up, but let's look at it on the 4 hour to get a sense of what's going on here. And now we have an opposite of what we have on the daily where we had a move up, and this almost appears to be a bit of megaphone pattern where you're expanding in the range. It's also a pattern of indecision, but instead of tightening, you're just expanding as the sellers are putting a bit more pressure on and the buyers are putting more pressure on in those two opposing directions. So let's see what SUI can do. I mean, generally, structure is looking good. And if Bitcoin and the rest of the crypto market is going to run and there are more funds flowing in, I don't see why this couldn't break to the upside. But if you're just looking for a near-term move on the 4 hour, getting a little overextended, but it could move more. I would anticipate, maybe we get resistance there and then it figures out what it wants to do. But it's a little bit just from the zoomed out daily view and the 4 hour. The chart pattern is a bit unclear, but it seems like there are a lot of good swings to play for perp trading. So it might be one to look at. I actually haven't even measured these out percentage wise. What is that? Yeah, 26%. Not half bad. All right, and the other crypto request that came up was PENGU, which I got some airdropped initially and I sold it, which was probably a mistake because it went from, about 1 cent to where are we now? 4 cents. Okay. Guess not of a move up yet. And I'm wondering if what I was looking at was actually something else. I don't know if it's the Pudgy Penguins. Yeah, it is the Pudgy Penguins one. I don't know. I'm getting confused. Anyway, let's look at it. So the one thing I like about charts like this is they don't have any overhead supply. On Solana and Ethereum, we still have all the price action above where there are people trapped and they might be selling into moves to the upside. Anything in blue sky breakouts generally has an easier time continuing to run back up. We are in the upper band of the confluence model cloud. So until this breaks into the center cloud, I'm assuming we could still bounce and have another leg up, even though things are getting a little overextended for it. Let's just look at the weekly RSI spiked a little bit. The problem with these is I would play it as a perp trade, but I wouldn't chase it as, a longer term hold position when it's run up like this. If we go into the 4 hour, we get a little bit more information here just based on the confluence clouds. You can see that it's definitely cooling off and consolidating a little bit and tightening. And as these bands begin to squeeze, you can just anticipate that another volatile move is going to be coming around the corner. So you can keep your eyes on the confluence model band on the 4-hour. And if you start seeing this drift towards the upside, that's most likely pointing to a break to the north side. And the same would obviously be true for the downside. But this one's had a lot of hype behind it. And if money keeps flowing into the crypto space, again, just watch those flows. I imagine this would have some more room to run in it. And anything in blue sky breakouts in the cryptoverse, I don't normally say this, but this is the one instance where if a move is starting to form up, and these are just short term, so, get in and get out. But it's the one time where it's okay to buy high and sell higher. And that can often be a lucrative strategy in crypto, but you just need to be nimble and be quick and get in and out. Looking to MicroStrategy, we had a bit of recovery towards the end of the week, at least on Wednesday and Thursday. And then Friday, we had a bit of indecision where we broke higher and then closed towards the middle of the range. I'm really looking at this resistance line overhead at, let's just say, $420 for round numbers. Getting some daily candle closes above there would put us in a much better position of strength, but we didn't break these previous lows, as I mentioned on Monday, so that was a good sign, and I think MicroStrategy is just waiting for Bitcoin to lead the way one way or the other. Now, Tesla, on the other hand, we had that fake out below our couple months long wedge pattern. When did this start again? That's right, in May. So we had that fake out. We have recovered to the upside. The good thing is we really got above this key resistance at 325 and our 200-day moving average that was giving us a bit of grief for a couple of days. And we broke out also from this minor overhead resistance line that we were facing and actually had no trouble cutting through it, then bounced off it for support. And now I'm looking to that major overhead line to see if we can break out of that next week. I would have loved to see a close above $330, just above some of these previous peaks. I mean, really, if we gotten like to 335 for the close, that would have been even stronger. So we are still in the middle of some of this consolidation chop. But all in all, it wasn't a bad end to the week for Tesla. And let's just keep our eyes on it to see if that can continue to the north side next week. Robinhood continued to show strength this week, particularly towards the end of the week, while Coinbase was weaker and Bull cooled off for the last 2 days of the week. And we got exactly into our next fib extension level at that 117,000 before pulling back a little bit. So this has just continued to show strength. We had a little bit of that breakdown from this trend line that has been holding us up since the bottom of April, but there's continued strength in Robinhood. And the only thing I guess maybe that you could say is a bit of a concern is that we're starting to get a little bit of a bearish divergence on the daily RSI. So this can still continue an uptrend for another couple of weeks before you really start seeing any impacts from a bearish divergence like this on the RSI. So keep your eye on it, but I'm wondering if we can make it all the way to that $125 now, which is the next alert I have set here on the chart. There definitely seems to be momentum behind it and a ton of demand. Bringing back Celsius, which we have not talked about for a while, and we were breaking down. Actually, I was a little bit concerned right before earnings. There was a sell-off into earnings, and we just wicked below this trend line that we have had on the charts, and we had very positive earnings that shot us up all the way to about $53. We were at $41. So it was a massive increase on earnings. And we are now propelled closer to our take profit zone, which is around that $60. That is the 50% level of the pullback from the previous all-time highs. So we're still targeting that right now. We have a good underside support line on the daily RSI that we have bounced from multiple times as well. So I'm just letting this one run a little bit longer before I start to take profits from this one. I've already rolled my options a couple of times. I didn't roll them on this. I'm just waiting to see if this can extend a little bit more to about that $58 range. Then I would start selling off my options contracts. Now, HIMS, in contrast, had the opposite response after earnings. We mentioned these, we're on the 4-hour, but we had these daily topping candle structures here before their earnings. So I got out of my position when I saw this pattern. especially with earnings coming up. I would rather be a bit careful. Then we had earnings and that drop. The good thing is we are into this trend line that has been holding us up since the 17th of April. We wicked below it twice, but we didn't close a daily candle below it. I mean, almost right there. We're like right on the trend line. So I started getting back in with some calls, but I'm watching this closely. If we break down from this trend line, that would not be a great sign, and I would close my positions at a little bit of a loss, and then I would just be looking out down below to see where we might eventually find support. The other one that had a massive reaction to earnings this week is Palantir, up over 20% this week and just blasting away from that trend line. Remember a few weeks ago we said when we broke above this that this is an exceptional sign of strength for the stock, even though it has a very high PE. It's a bit overextended on the charts. It continues to outperform. And now the great thing is, since we have broken above this trend line, if we do have a correction in the future, it could be in the next weeks, months, I mean, even next year. If we come back into this trend line, you can now anticipate that this trend line is going to play underside support for Palantir. So we at least have that. And honestly, now, because I haven't been in it for a while since some of these swings that I was trading, I don't want to chase it at the moment, even though it could keep running. What I'm looking for is actually one of those retests. If we ever get a pullback and come back into this trend line, and if our RSI is oversold when something like that happens, then I would be happy to start building a position again in this particular name. And as I say in many videos, I love entries like that because you have such a clear invalidation. You can get your entry, set your stop just below, and if you break and close back below that trend line, you know that your thesis was incorrect and the stock is going to have a more meaningful correction. Okay, another one that I got into actually a little bit preemptively, but we just broke out from this downtrend on CRWV and we had a very strong move away. We are now into the 618 Fibonacci level, just above it for the close. Now, it might be a little risky holding this into their first earnings call, which is on Tuesday the 12th, but it did seem like it was worth getting into just on the break of this longer downtrend. And I had a small position already. I think it was right here. They had a fire at one of their facilities and the stock dropped quite a bit and then bounced back up and then continued to bleed off. So between this and my entry here at the lows, I'm now sitting at about 115 or so for my average cost on CRWV. And we'll just need to see what this can do. But right now, I would imagine that this should recover at least to the $160 range unless something crazy happens on their earnings call. Looking to ASML, where I've also been getting into a position, I got into a little bit of a position at these lows here. And then as we started forming this base this week, I got in a little bit more. So I've got a good average cost basis. We did just get back into the Confluence Model Center Cloud, which is a good sign. And we closed the week above the 200-day moving average. Granted, we've gone up and down along that for some time now. We could still get another pullback. Often when you break back into the center cloud, sometimes you get a move away and then you back test it before you really bounce. But this one is looking decent right now. For me, some of my swing trades are shorter term holds. This one is definitely a medium term hold. My calls are not expiring till the spring of next year. So I'm giving myself some time for this one to rebound and for the thesis to play out just with the money that is flowing into this space. One of the most dramatic earnings reactions this week was the trade desk, which actually after their last earnings bounced substantially and worked its way closer to recovering from this drop that came from a lawsuit that they were facing, but they are still quite profitable in terms of their ad revenue, and they actually beat on earnings. But the reason for the drop was simply because the forward guidance and the earnings were not quite as bullish as what Wall Street was expecting. And also their CFO is stepping down and they have someone new coming in. So that bit of uncertainty led to the sell-off. But I would suggest that this was an irrational sell-off considering how good earnings were and how good things are just looking for the future of the company. I mean, 40% is a massive drop. So I was a buyer this morning on the trade desk because everything mean reverts. And even if you don't think we are going to get back to these highs, in the $130 to $140 range, there should be at least some mean reversion expected. Now, the one thing we can say is that gaps on the daily often close, and we had this previous gap up open right here on earnings. And what I did is I sold my last position from these lows after that positive earnings report. And I was watching this in this pullback, and I was looking for that gap to close at $61. I actually had an alert set there that has now triggered. And we didn't close that gap, but now we have, and we have a new gap to the upside all the way up at 87. Are we going to get there right away? Probably not. Over time, I suspect we most likely will. But this is one of those plays where I think there is just a market overreaction. And if we were to break down further, say if we were to break below, around 51 here, I would start to get a bit cautious. And particularly if you break these lows at 42, something is definitely wrong. But we found good support today, and I just put a stop order a couple bucks below my entry, and I'm going to see what this one can do. Now, in terms of targets for the recovery, if we just measure out a fib retracement from this zone right here, I normally target at least a 50% bounce for extreme moves like this. So that would put us at $72 from the current price at closing of $54, which is not a bad move back up to the upside. But if we are looking for other zones where we could anticipate a bit of resistance, these swing lows right here, let's say in the $65 to $66 range, I think we could safely anticipate a bit of resistance there if we bounce back up as our first target, and perhaps even, maybe this swing high at 62. We have a pretty good size volume gap right here, which also we are finding support from. So if we bounce back up, I actually imagine it could be a pretty quick recovery back up to that $70 to $72 range where this next volume cluster kicks in. All right, and last chart today, I'm not going to cover all the treasury plays because a lot of them are not doing too much. A few have started bouncing a little bit, but UPXI is continuing this strong move away from this higher low that we've had, and I'm just going to keep my eyes on this one. Next week, I did fully position now. The one lesson I have learned with this one is to not buy too many options on this, because I had about 1,500 contracts, and then I was looking at the volume, and there were only 1,800 in the strike price. So I was the majority of the options contract volume. So those are going to be hard to unload. Lesson learned, always check that before you enter your options. And this one might have been better just played as spot because it does move by meaningful percentages. But all in all, I would say right now the recovery is looking good. If we sharpen up just our fib levels to this correction, I think we could anticipate maybe a little bit of resistance coming in at 677, or really the 50% level at that $7.50, which is a nice round number. So keep your eye on those zones, and hopefully this one can continue to recover as Solana seems like it's gaining strength as well next week. That's it for the charts. You know what to look out for next week with CPI on Tuesday and PPI on Wednesday that could move the markets. Beyond that, really just keep your eyes fixed on the S&P 500. If we can make a new fresh high, setting a higher high in the price structure, that would be a great sign. Otherwise, we're going to look out for a consolidation range and keep your eye really on the low from last Friday. If that low gets broken, that's setting us up for maybe a little bit bigger correction in the 5 to 8% range. and that could last a couple of weeks. But if anything meaningful happens, I will be posting on X, and like I mentioned in the intro, I will also do iPhone uploads because I won't have my whole setup, so I'll just be talking to camera if anything crazy happens. And you can find me here on YouTube. But I look forward to seeing you guys in a week and a half when I'm settled back in Canada. Have a great weekend. Bye for now.